Hello, everyone. My name is Matt Cincerello, and I'm the owner and managing partner here at U-Nique Accounting. You can learn more about what we do by visiting our website, u-niqueaccounting.com. While you're there, I recommend that you check out our free guide page where you can download some free content like our top 10 cash flow mistakes that can cripple a business. Also, if you're wondering what I'm drinking today is coffee. It's the morning. I'm shooting this very early. I've had a long week. Normally, I would be drinking a beverage out of my Make Today Count mug, which is a hashtag that represents the not-for-profit foundation, My Best Friends Foundation, which is a not-for-profit that I'm a board member of. If you or someone you know is suffering from the impact of cancer in their life, a link at the end of this video will be provided that you can fill out to receive some help. So let's go ahead and jump into today's topic. And today's topic is why your bar or restaurant should be using the 13-month calendar. So as an owner of a bar or restaurant, you have a tough job. You have to manage tight margins, you have high turnover, and let's not even talk about no shows and people calling in sick at the last second. You also have to monitor your purchases closely so that you have enough supplies to serve your customers while also not having too much waste. So the last thing you need is slow and inaccurate financials that make it difficult to analyze and make important decisions about your business. So the pain, you just don't have good numbers. So as an owner of a bar or restaurant, have you ever looked at your monthly financials and thought that they're just not a true depiction of what is actually going on in your business? Your period over period performance looks wonky. You manage your prime costs pretty tightly, but your labor costs as a percentage of sales dip up and down way too much. Well, the issue is your financials stink, but it's not your fault. Your data and margins fluctuate up and down because you just don't have time to allocate your payroll costs into the right period. And your sales data from month to month has a different number of days of the week that it starts and ends, which impacts the number of weekend days that will appear on a report. Well, I'm here to tell you that there is a better way to do your reporting, and it's actually easier to implement and manage than the current monthly accounting and reporting that you're doing. So here's the problem. It's the Gregorian calendar. This is the calendar that you have used your whole life. And there are 12 months, and each month has a different number of days in it. You know, from a business point of view, this calendar makes record keeping and financial reporting for your business much more complicated. Each month ends on a different day of the week, and each month will have a different number of weekdays and weekends in it. So you can see right away why this is an issue for reporting for bars and restaurants. So the solution to this is what we call the 13-month calendar, and it's also called the 52-53-week calendar. So instead of having a different amount of days in each month, the 13-month calendar consists of 13 periods that have exactly 4 weeks or 28 days in them. Okay, so now every financial period, instead of having a different number of days, will have the exact same number of days in it. And more importantly, every financial period will have the same number of weekdays and weekends. From a business point of view, this calendar makes the record keeping and financial reporting for your business much easier. You have easier record keeping of your accounting and payroll data and easier period over period comparisons on your financial reports. So you're probably thinking, should I switch? So if your sales follow a weekly model, which most bars and restaurants do, with the weekends representing the bulk of your business, then yes, 100% yes, 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 yes. Your industry has tight profit margins and you have to constantly watch them. And the 13-month calendar process will provide fast and accurate analysis of your prime costs so that you can keep a handle on your business's finances. So are there any reasons why you shouldn't switch? Well, there is one, and it's because each 13-month calendar will only have 364 days in it instead of the normal 365 days. This means that every 5 to 6 years, there has to be a 53rd week added until the last week of December, since every year is 1 day short for the 365 days. So yes, this is a little weird, but this is just a little nuance, and it's very minor compared to the advantages that your business will have with having the better financial reporting using this weekly process. Well, thanks for listening to our advice on the 13-month calendar. If you appreciate our advice, please remember to like our video and subscribe to our channel for future content. Until then, remember, don't conform, stay unique.